Bottom
Yeah.
line is we're going to get some movement this week. That's what I'm really excited about. So I'm getting positioned on the SPY and the Qs this morning. I'm taking a look currency-wise. I'm really watching the dollar index. We talked about that a couple weeks ago in FOMC. That's my big barometer for currencies and Forex right now.
Hmm.
But I think we're going to get decent movement. So I'm playing around with expirations. I'm trying to give myself a little bit of time. So it's not just, this is the contained week of it has to move this week. I
Sure.
think it's able to kind of break things out. I mean, you had mentioned it. I guess I miscounted this morning because I did a live session at 9 o'clock. I had 14 of 15 weeks were bullish, and you had 15 of 16 weeks bullish. Again, same thing. You're probably right because you counted a little bit more slowly than I did. But point is, all of our so with the SPY, the Qs, and the DIA, 15 out of 16 weeks, all bullish. That run that we had since the bottom in October 2023 is pretty wild.
Hmm.
Somebody had me look at a SMCI today, another like semiconductor play. It's
Yeah.
up 150% this year. Like, just it's maddening to see that people are just chasing semiconductors and some of the momentum in the stock market. And so I took a trade this morning on SMCI. I did like a 10 delta bull put spread. So I know, we talked about options a little bit. You've done some naked puts to see, as long as that's Warren Buffett style where you just, sell a put, sell a put. If price comes back to fill you, great. SMCI is
Covered
a little bit
calls. Yeah.
expensive, right?
The
It's a
wheel
$600
strategy.
stock or $700 stock. So I
Yeah.
did a credit spread. I've got,
Okay.
I collected $1.05 on a $5 spread, but high probability, about 85% probability to profit. We stay up there and stay elevated. So I did a
Hmm.
600 by 595 this morning. I'm doing some trades on the SPY and the Qs and posted these in my trade alerts this morning. So yeah, I mean, I think this week is going to be volatility expected. Let's see some movements higher, lower. Since the SPX didn't really sell off at 5,000, the SPY didn't really move at 500.
Hmm.
I think this melt up continues, man. I don't know if it's a retail trader just thinking it has to stop. I mean, 15 out of 16 weeks is a reason for the market to pause,
Sure.
but it doesn't mean that the top is in. It doesn't mean we have to have anything more than a pause or a pullback. And this just melt up continues. I mean, one thing that's really interesting. Have you paid attention to last year? Felt like the Mag 7 drove the entire market. This year, the market's a little bit more willing to say, okay, 7 stocks is a little bit too concentrated. Now we're going to go to the top 25.
It's
So
it's expanded a little bit, Chris,
a little
and
bit,
yeah,
a little
I
bit,
was
yeah.
pointing out the Russell.
Yep.
I have some speaking of naked puts that I've sold. I've sold puts on the Russell, which has been it's been a great move so far. It's
Hmm.
kind of one of those things. It's like whenever you sell puts, if you really want to buy it, sometimes it's like I wouldn't have mind gotten filled.
Right.
And I still think that for me, Chris, I'm kind of in the camp of I think in the second half of the year, we do see rate cuts. And if that happens, I think you see a further widening out in the
Yeah.
market. And
Yeah.
that extends to gold as well. I do think that you can see a gold rally in the second half of the year if you get rate cuts kind of meaningfully coming in. But it kind of sets us back up to that big question. CPI is pivotal because it really is going to set the scene here for whether or not we get cuts. March is kind of off the table right now,
Hmm.
but it could, in an extreme case, maybe bring back March, but in a more likely case, the question is more about May. Are we going to get cuts in May? And I guess I led off, or I left off the show with Ivan and Frank asking them this question. I want to pass it to you as well. If you do get hot inflation reads, this market, we saw jobs numbers come out real strong. You saw Jerome Powell say March is not really a big thing. Does the market even care? Does the stock market, when it just keeps running and running and running, does it really care about the CPI report, or is it just going to blip down again and rally if it does see a hot print? I don't know. How cautious or ignoring of the CPI data do you think this market is?
Yeah, well, I think the market's done a great job ignoring it for the last 3 months.
It
So
have.
if the market pays attention now, it's possibly if there's a big shift on like the CME FedWatch tool, if like, oh boy, maybe they're not going to cut rates in May, maybe it's going to be pushed out to the summer. That's about the only way I'd see the market latching on to something that drives it lower.
Mm,
Um, I mean, like we talked about, technically speaking, a pause, a little check of this rally makes a lot of sense. So
sure.
I could see that being like a hesitation, but the market is doing everything it can to just ride the coattails of momentum right now. And, the indexes are melting up higher. I mean, what's interesting is if you take a look at just sector performance overall, I mean, things are off to a great start. I'm looking at the sector and the sector tracker year to date. I mean, the S&P is up 5.38%. It's being outpaced by communication services, which is essentially led by Netflix, I believe. That was the big
Yep.
push in Netflix with their crazy earnings. Meta platforms as well. So Netflix and Meta, just those two alone, with the big beats they had in earnings, they're driving up the communication services sector. The one thing that's interesting, I'm watching really closely, is healthcare. Now,
Yeah.
healthcare,
Yeah.
another sneaky one that's in there is Eli Lilly with
Hmm.
Ozempic and the love for, let's just take a shot to lose weight. It's like classic America, right?
Sure.
Um, so Eli Lilly is driving the healthcare sector, but then you have United Healthcare, Johnson and Johnson, with big index weight, but healthcare is actually keeping pace with the S&P 500, and then technology, of course, is up as well. So it feels a lot like last year. Nvidia is up a ton, and index weight wise, like Microsoft, Apple, Nvidia. I just named those three stocks. That's enough to just drag the sector higher, keep pace with the
Sure.
S&P. So I just think the melt up is the market's like desperate to carry on the momentum that we saw from last year. I think that the market, this is that classic situation. The market can remain irrational, then traders can remain solvent. So anyone that's calling tops and swearing there's going to be a bear market, this is what's bothersome, right? Is you can see
Yeah.
this same person on Twitter, on YouTube, and whatever it is that's just doom and gloom, and they might play this narrative out for the next 1 to 2 years, and eventually say like, "I told you." But right now, if we go up another 5% in the broad market, another
They
10%
won't
in the
say a
broad
word,
market,
right?
there's
Yeah.
plenty of opportunity to make money. So I'm not trying to position one way or the other. I like to take trades where I can take, up, down, sideways. Can I carve out net profits over the next 1 to 2 weeks? That's how I trade.
Well, and Chris, you gotta sort of bow down right now to what is working in this market, which is
Yeah.
momentum.
Yeah.
Momentum is really, really playing ball. And if you're somebody out there in the audience who trend trades, you might not be having that much fun with gold right now. Gold has been
Right.
super choppy. I've got it pulled up on my screen, Chandler, if you want to show that. But again, look at gold here. Gold has been range bound. However, the dollars had some nice momentum. If you're more on the currency side, the dollars had some good trades. If you trade things like dollar yen, sure, you want to probably stay away from more choppy markets like gold. But an interesting area is oil here today. But if you've been trading the indices with some momentum, Chris, I played the indices. I played them absolutely perfect until I didn't. So basically, I was long November 1st all the way through sort of most of December. So I have caught most
Yeah.
of this rally. Since
Yeah.
then, I took off my momentum trades here, sort of obviously in hindsight looking a little bit foolish because the market did keep rallying. The way I've been trading this personally is still taking advantage of some of this momentum by like we talked about, selling cash secured puts and where I've been really positioned. You mentioned some sectors. Has been things like the Russell, but also XLK, XLC, XLY. These are the three, and XLE as of more recently. I've sold puts on these things, and so I've still played the momentum, although underperforming just a little bit here so far this year. But I am looking for that pullback. I think it is a healthy thing, but to your point, I don't think it's a healthy thing when you have all these green lights to sort of say, well, the recession is right around the corner. Sure, if you keep saying that, eventually it will be.
Sure.
However, I think it's more healthy to say, well, hey, if a pullback comes, I can be constructive within that pullback, still trade the momentum, and in the
Mhm.
meantime, I'll collect premium on the way up until it's time to get filled. So that's the way I'm personally positioned, the way I'm watching this market. And Chris, I want to kind of let you fly here because for those of you who are in the audience, we've got something cool kind of lined up this week, and for the future until further notice. We're going to be having Chris coming on here. And he's sharing, I think right now, some of you guys who are listening are from Chris's side, and others are from the A1 trading side, and others are from my channel side. So we've kind of got a melting pot of people listening in. And Chris is going to take over the show here for a little bit, and I'm sure he has plenty of ideas to share with you guys. I do want to just say last thing before I head out and hand this over to Chris is we are doing our EdgeFINDER sale right now. Chris has a discount code he's going to be sharing with you guys here in a second to get you 35% off of the EdgeFINDER. So, Chris, I'm excited to see you play around with the EdgeFINDER, and I'm also excited to just listen into your ideas here today. So, I'll leave you be. We'll give you the floor here, and we'll be listening in.
All right. Appreciate it, Nick. Thank you.
All right. See ya.
All right. Bye. So I've got the screen up here. I'm gonna do a quick recap of what we talked about this morning during my 9 o'clock live session. So I just placed a couple of trades. If anybody's interested, this is going to be an options setup. So I went into the SPY and the QQQ. I went into a 223 expiration. I was just getting this posted in Telegram this morning. So if you'd like to take these trades with me, if you're an options trader, this is what I'm doing. If you're in my equities on demand class, which I know a lot of you are, this is what I'm doing. I'm going to post this in Telegram, post this in the spreadsheet. So we already have some expirations going to the 16th. We're going to take a look at those. And we still have a 216 expiration that is on the IWM, which we'll take a look at because that is a bit of an expansion play, looking to see if the IWM makes a rip up to 205, 206. But let me finish up this one right here. So this is the trade that I'm in for the SPY. I decided that with this week's calendar, the 12th through the 16th, we have CPI on the 13th, we have PPI on the 16th. We already have some 216 expirations. I want to make sure it's very clear we're not overlapping and maybe double upping on some of those strikes. Double upping, doubling up, doubling up on some of those strikes. So I went out to the 23rd to give this a chance to see if CPI data moves a ton, we're going to have close to max profit by Friday. If it's a noisy week where the market takes a beat, takes a breath, and we have indecision this week and decision next week, I want to go out a little bit further. So that's why I'm doing the 23rd expiration. So this is the trade on the SPY. You can bring up an options chain. Right now, the SPY is trading at 501.16. So essentially, I'm going one strike above, one strike below, and I'm buying a call at 502. I'm buying a call at 500. So there's my 502 call. There's my 500 put. Now, I could just let it run, right? And I'll show you this right here. If I buy the 502 and the 500, I'll show you what this looks like in a platform here. So I'll go SPY. I'm doing this for the SPYs and the Qs. I've already taken the trades, and I'll share those with you in just a moment. So let's go out to the 23rd, which is not this Friday, but next Friday. And so what I was looking at here is the SPY is trading at 501.16. So I buy the 500 and I buy the 502. Now, if I deleted this leg here and I deleted this leg, if I wanted this to essentially run and be open, right? So it's going to cost me $6.73 to do a long strangle. That's the strategy where I buy, two options here. I buy a call, I buy a put, and they're at different strike prices. Now, the good and the bad is this. If I buy this long strangle 502 by 500, because I'm going one strike, out of the money on the call and one strike out of the money on the put, it's going to cost me $6.73 to do so. What that means is I need price to get $6.73 beyond my call strike. I also need price to get $6.73 beyond my put strike in order for this trade to be profitable. Okay. Now check this out. This is how I craft a lot of these trades for my equities on demand trading room. Right here, that POP, that's probability of profit. We have a 48% chance of being profitable on this trade. Now, the reason why that doesn't seem very high is because we're essentially saying, look, we're market neutral. We're looking for the SPY in a given week to give us maybe $9 to $10 of movement one way or the other. But it doesn't necessarily start from a 501 point, right? Just because we're at 501 does not mean we go to 511 or 512. It doesn't mean we go to 491 or 490. We could go up to 505 and we could drop to 495. That's a $10 move on the week. But that $10 move does not cover my cost of this trade at all. Okay. So what I'm going to do is make this a little bit cheaper for me. And I'm going to sell an option a little bit further out and collect the premium to lower the cost basis. So what I thought is this: if I went out $4 to $5 and I sell an option, so I'm buying the 502 on the call side, I'm going to sell the 506. So I'm going to make this an equal strategy. So if I'm going out $4 on the call side, I'm going to go out $4 on the put side. So I do a 500 by 496. Now here's what this means. I can spend $3 on this trade and I just cut my cost from $6.73 down to $3. Okay. Look at the jump in my probability of profit. I went from a 48% probability of profit to now 72%. I'll take that trade. I'll take those probabilities. Anytime I can get 70 to 80% probability of profit, I will take that trade. Okay. So 502 to 506 and a 500 by 496. I got in for $3. My max profit is capped at $4. So I can pay 3. Okay. I can walk away with 4, and that gives me a 25% return on this position. So all I need price to do is get close to 506 or get through 506, get to 496 or get through 496. And that's going to give me $4 on that put side or $4 on that call side. Now, in truth, if the market decides, because of the big potential volatility we have this week, if the market expands beyond a $10 average and we do in fact get to 509 or 510, that call side is going to be worth pretty much max profit at $4. If we decide to have a terrible week and the market finally checks that rally of 15 out of 16 weeks in a row, and we get to a 492 or 491, that market could push down to 490, 491, get this nearly max profit on the put side. Does that make sense? So I'm trying to make the trade a little bit cheaper on my behalf. I'm going to pay $3 and I'm going after a high probability, 72% chance for profit to make $1, which again, $1 out of 3 is actually, that's a 33% return. My fault. So I can make $1. I'm paying $3. I get a 33% return on that position. I like that trade. Okay. If I took that trade 100 times with that probability and it paid me 72% of the time, I'm going to make money. And that's what I love about trading options is it's pretty straightforward. You're calculating probabilities of profit. We have weeks like this where there's a lot of volatility expected, and I'm not trying to pay an arm and a leg because right now with momentum, buying options is expensive. Now, the flip side of that is I can say, well, I just need to be an option seller. Well, you could do that. You could clear this up and you can be an option seller. You can go out to the same expiration, which is how many days out? If I went out to the 16th or the 23rd, that's 11 days out. That's not super far out, but I could say, you know what? I don't think that after this week's trading, if I went out to Friday the 16th, the expected move is this says 506, but I'm looking at the weekly average around 11. I would look to see, do I have delta wise, I'd have to go up to like the probably the 509 or 510 and try to sell a call. I did roll this, so this is why you see these, negative ones here. So I have a call that I rolled up. I've got a 509 by 510 bear call spread. So on the upside, as long as price this week stays below 509, I'll collect full profit on that, which is about 15 to 20 cents with the contracts that I have. That'll help me make some profit on another trade that we have going out to this Friday's expiration. So I'm hoping that, for equities on demand students, this is probably just par for the course and very familiar. For anybody that's new watching me from A1 Trading, you're like, what is this guy talking about? Option stuff. Yes, you're going to see more and more of this because trading options. I know Nick. Nick does like the classic Warren Buffett, cash secured puts, which is you sell a put, you collect the premium. If you don't get filled, you don't get filled, you don't get filled. You keep doing that until eventually you get filled at the price you want. But you can keep getting paid along the way, and that's always a great investor tried and true method of get paid to not even own the stock. And then when you do get filled, eventually get filled and you own the stock at a price that you want. And meanwhile, you've collected premium for maybe, 2 to 4 weeks, and it lowers your cost basis when you eventually take ownership or if you want the stock. So that's a great, very safe way to generate some income while also putting a price point where it's like, if the stock did come to this level, I like to own it. I want to own it. So that's a good way to do it. I tend to do a little bit more, active, 2 and 4 leg trades where, like I said, I'm spending $3 to make one. That's a 33% return with a pretty high probability. I didn't finish this post in Telegram, but I'm going to right now as we're talking about this. And if you have any questions, feel free to jump around and post some questions in the chat. But I did the same thing on the Qs. So I did a 223 expiration on the Qs, and I'll give you the legs of this trade as well. So I got filled. It was a 385. I'm going after a $5 cap. So let me get this in here as well. So this was a buy to open, 438 call, and then a sell to open, 443 call. And I did a strike, 2 strikes below that. So I went basically one strike on the Qs up, one strike on the Qs down. So this was a buy to open, should be a 436. Yep, 436 put and a sell to open. And I kept that even with $5. So I did a 431 put, and that's a 385 debit. And I'm looking at a $5 credit. That's a max target. This one is actually, this needs to be $4. Okay. So I paid $3 for the SPY. I'm looking at a $4 differential. So that's my $4 max credit. And again, to be honest, if you're watching this trade with me, we're going to hit $4 if price goes probably $5, $6, $7 past our long call or long put. There's going to be some premium we have to get through. We have to see how the time decay works in our favor as far as selling options. But it's pretty straightforward that, let's say we have a big week and the market like blows up to 510 on the SPY. Well, we can probably see $3.90, $3.95, which is a majority of that profit within a few days of trading it. So I don't mind if I'm maxed out at $4 if I can take $3.95 of profit and leave, a week on the table for expiration. Okay. But on the Qs, a little bit more implied volatility. I'm paying 385, which is slightly higher, but I'm going up another dollar. So I'm paying 385 to make $1.15. And again, return on investment, if I get to get that probability, I'll show that trade as well to show you the probability of profit. So if I pay 385 and looking at a max profit of $1.15 divided by 385, that's a 29.8% return. Again, roughly 30%. We should see that that probability of profit is probably pushing 70 to 72%. So if I go over to the Qs really quickly, I build out that same trade, go out to the 23rd right here. These are the legs. So the 438 by 443, and then the 436 by 431. This is the trade right here. It's actually a few cents cheaper right now in the live market. 72% probability of profit. You can see that on my screen. So there's my probability of profit. Pay 382, walk away with $5. That's $1.18 max. But again, right around that, 28 to 30%, which you can see the efficiency, right? I have a 28% return. There's a 72% chance of profit. So that makes me whole at 100%, right? Do we have a good volatility expectations this week? Yes. The Qs and the SPY will move quite a bit because of CPI and PPI coming in this week, right? So that's a little action I've got going for the week. I also did this, and somebody brought this up on my YouTube channel. Gerardo asked about mentorships. Yes, I'll do a quick little public service announcement. So if anybody's following me for the first time, this is something I plan on doing on the regular. This is awesome to be a part of this collaboration with Nick and team with A1 Trading. And hopefully we're just all here to help a bunch of traders. So on my Discord channel, I do have, this is just what you're seeing for my entire channel. So I do have private instruction. If anybody's interested, I know, Frank and Ivan and Nick mentioned it as well. I mean, look, any help that you all need, get it. Right, whatever you're interested in trading, whatever you're interested, if you need help at navigating the edge finder, I mean, it's like watching in a way, it's like watching Nick and Ivan, use a Bloomberg terminal with Edge Finder. Like the data that they pull in is that good, where the type of trade ideas they can generate from this, and the content they can produce and the ideas they can produce is second to none. So get your 35% off on the Edge Finder. I do have a promo code for that, but I'm not shamelessly plugging that. But the promo code is Pulver. But my private instruction, yes, I do a lot of 1 hour and 8 hour workshops. I typically work with groups. If somebody wants to sign up for like an 8 hour workshop, I get a group of like 5 or 10 traders. I try to cap it at that because I don't want to have 50 people that are all asking questions. I mean, I want it to be nice and intimate where we can address all the asset classes. We could trade forex. We trade a lot of options. So yeah, private instructions here on my Discord. And everything else is all in one spot. So my affiliate links for my promo code with Nick and team, some option software, Tasty's my broker for stocks and options, tradingindicators.com. I've got a nice little bundle package there with Daniel Sinegan team. They're great. And anyway, so yeah, you can find it out there. If you want to join my Discord, and again, I hope this isn't stepping on your toes. I mean, join the A1 Trading Discord if you'd like to join mine. It's a free group chat. We've got a nice community here. I'll share that link in the chat. So this does not expire. Copy. I'll just put here, Chris Pulver. Yeah, thanks for posting that, Nick. That's awesome. Chris Pulver Discord. And it's actually, so the handle is Chris Pulver Trading. That's the server. Discord right here. And I want to say this. I'm sure Nick deals with this all the time, and it's super annoying, but we have a lot of imposters. We have a lot of fraudulent accounts out there. My handle is real Chris Pulver. Okay, there's no period, there's no dot, there's no dash, and I do not I do not start or initiate any type of direct messaging. Okay, so if somebody's like, "Hey, how you doing?" and you think it's me, I'm not initiating those conversations. You are all welcome to contact me, to message me in Discord. I will respond to that, but I will never initiate, and I will never offer anything that's like, "How about this for crypto? How about this for?" No, I do private instruction, and then for the rest of that, I just analyze the markets, I trade, and manage my portfolios. Right. So just make sure you watch for scammers out there. Same thing with Nick and A1 Trading. I'm sure there's tons of imposters out there, and it's really sad, but it's just we're in the public forum like this. It sucks that we have to deal with that, but it is what it is. So just be careful. Use some common sense. We're not trying to offer this crazy stuff that seems like, why are they doing this? And especially when it's crypto related, just double check with us because you can contact us directly. Okay. All right. So I've got trades on the SPY, trades on the Qs. I want to take a look at SMCI because somebody brought that up this morning. I think it was LG in the chat, LG Acres. So let's go to SMCI. And right now we're trading at 783. The stock is just ripping again to the upside, another, $40 higher from last week. I went out on the SMCI. I put this trade in this morning. It's a little expensive because it was a $5 spread, but I did get filled. I got filled. I did a 600 by 595, and I got filled for $1. So again, let's take a look at it. Let's look at the probability of profit. I went out to March 28th, which is the end of the month. It's not a monthly expiration. That'd be the 15th. That's 32 days out. I went ahead and did that kind of sweet spot for me around 45 to 60 days. So I'm doing the 45-day expiration. I'm collecting premium. I'm going way out of the money on a credit spread. And so this is the expected move. If you see this right here in this little shaded area, this big shaded red zone right here, okay? This shaded red area is where the expected move of SMCI is over that duration. So until the 28th, the market's expecting to move about $178. Now, what's interesting is if we move $178, we're trading at 783. That means to the downside, I'm looking at about a 610 to 620, right? Give or take. If this is spot on. Now, obviously, this shifts with price. But my point is, if all I did was I did the 600 by 595 and I go down to the 600 by 595, I did a bull put spread. Okay. That seems to be way more credit than it should be. I don't think that's going to get okay. I don't think you're going to get filled at $3.25. That would be incredible. There's no way. That spread, I see an 880 credit to a mid at 325 to a debit at 230. That's a very, very wide spread. I got filled for $1. Okay. So realistically, we're probably going to get filled for $1 on the trade. It's a $5 spread. So again, if I'm speaking foreign languages to anybody, just bear with me. One thing you'll see is I might talk 100 miles an hour, but I talk the same way every single day and it starts to sink in. So it might feel like drinking from a fire hose at first, but there's a lot of information that is super consistent day in and day out. And so I know that the learning curve is much faster with traders that follow me. They just soak it all in for a couple weeks and you'll start to pick right up. And all of a sudden you're learning, crash course and options and Forex and all the trading within, 2 to 4 weeks, as opposed to never learning, right? It's like we do this and we grind in the markets every single day. So what I did is I'm just looking at again, delta situation. Here's a 14 by 13 delta. This is negative delta because I'm going out of the money on the put side. But all I did is I sold the 600 and I bought the 595. So that's a $5 spread. Now, 330, I can almost promise you that we're not going to get filled at $3.30. Okay, we're probably going to get filled at like $1. I took the trade this morning and got filled. Thanks, Ruth Ann. I got filled for $1.02. All right, which means this: I got filled for $1.02. So I did a 600. So it's a 328 expiration. Okay, which is around 45 days out. So I sell to open the 600 put. I buy to open the 595 put. Okay. And I got filled for $1.02 credit. Now that means this: my max risk is the remainder of that trade. So that would be $3.98. Okay. My max profit as a premium collector, and I'm selling the option, my max profit is that $1.02 that I collected right now in the trade. So all I need is price to stay greater than $600. That's all I need. And I'm giving the market 45 days to do that. Now, $600 away from current price at 786 is like a 20 to 25% move. So what you're telling me is, in order for me to lose money on the trade, the stock price has to drop 20% in the next, 45 days. Yes, a lot of things can shift. We can check this rally on the indexes. We can check this rally in Nvidia and SMCI and all these semiconductors. But what is holding up the market right now? What is this momentum that everyone's seeing and missing out on? It's everything I'm talking about. We might have a little pause in the sectors, but I don't think we turn and pivot and all of a sudden we go into this crazy bear market. The threat of recession has been dropped down so low that this is where the melt up is coming in. Last year, November, December, when the market ripped up as high as it did, that was on the optimism of things are looking better for the economy. The recession's getting kicked down the road. The Fed is looking to pivot and be more dovish and start cutting rates in 2024. This is what sparked that aggressive rally. Now we get into this year, and what's happening? That optimism has carried over into the new year, and we're starting to see that earnings better, guidance better, more optimism, recession even kicked further down the road. Yes, the Fed is saying we're going to start cutting rates, but it's higher for longer until probably May. But the Fed is still going to cut rates this year. Okay. I'm really interested. I'm in a position where I'll be selling a house probably in April or May. And once the Fed starts cutting rates, we're going to start to see some resiliency in the housing sector where we have supply catching up with demand. If we start to see 30-year mortgages going from 6.5% to 6%, 6% to maybe sub 6%, you're going to see a wave of refinancing for people that closed at that 7 to 8% mortgage, which is terribly high if you didn't close on anything in COVID. But that being said, about I want to say 90+% of all mortgages right now in the U.S. are sitting sub 6. That's a lot. And I think 75% of all mortgages are sitting like sub 4 because of all the refinancing and new closures that we had in 2020 and 2021. So all I'm saying there is that's a lot to ask for the market to do, to have 150% rally pull back, 25, 30%. It can happen, but the momentum is there for the market to at least go up and just pause. If the market goes up and pauses on SMCI, guess what happens to my trade? That time decay works in my favor. And so, although I collected $1, maybe in the next 2 to 3 weeks, as time works in my favor, maybe I don't have the full $1 because I've got to wait for expiration. But maybe that trade, if SMCI is up to $800+, that trade for me is probably going to be showing, maybe 50, 60 cents of profit. And so if I want to take the profit and walk away, I could do that. And that's a quick way to grab 50 cents maybe in the next 2 to 3 weeks. But I'd like to sit on to expiration because I think at the very least, market goes up, maybe pauses, maybe pulls back, but I'm giving it a wide movement. I mean, this market has to drop $180 in order for me to be threatened on that position. So I'm not that worried about it. Again, I'm collecting $1 to risk 4. I get that. But I think the probability of profit is pretty high, which is why I'm taking the trade. Okay. All right. So that's another trade I took this morning. And that kind of catches me up to right now. If you'd like to take a look at some other stuff here, this is what I was mentioning when I was on with Nick before he took off. The S&P index compared to the sector tracker. So, Nick had mentioned he's doing some puts on some of these sectors, which is great. The ones I'm watching really closely this year, I think if you are in the communication services sector, so XLC, if you are in financials, if you're in XLV, if you're in XLK, those are looking great this year. With the chase of momentum is in these sectors. By far, these sectors are doing pretty well, hanging in there. So the financials, typically low beta, very slow compared to the actual broader market, but I'd say keeping pace in a pretty impressive way. Bank of America's had a pretty decent comeback, and so is Wells Fargo and Goldman Sachs and others. But a big one in financials, I'm pretty sure Berkshire Hathaway is a huge one in financials, which is interesting, considering it's just kind of trading, tick for tick and very correlated to the SPY or the S&P 500. But if I just look at what's green, if you want to see where the momentum is right now, you're in these green sectors. Okay. Your communication services outpacing, your financials keeping pace, your healthcare is, I'd say, I'll put a dash there for keeping pace. Your technology is outpacing. Okay. Now, if you're looking for undervalued sectors and possibly some sector rotation at some point this year, utilities, way undervalued and underperforming. Now, utilities is not an exciting sector to be in. It's usually defensive, which means utilities probably won't get a lot of love if we're going to continue to see technology, AI, high concentration and momentum to the upside with these tech related stocks. Utilities is not the play. Consumer staples, not the play, right? I mean, that's going to be, I'll put a D here for defensive. These are defensive. So when the market is thinking, okay, recession, okay, things are going to slow down, those sectors try to stabilize or possibly outperform in the duration that there's a little bit of risk off trading. But for the most part, broad markets up, sectors that are risk on are up. And that's where the momentum is right now for 2024. So if that's what you're following, that to me makes a lot of sense. Okay, what about silver? A good question from Rajesh. Yeah, silver. So I've said this before. Bitcoin. Ooh, what? Bitcoin crossing fresh highs at 49. What up, Bitcoin? So we've got 49 and change on Bitcoin. One thing really interesting. I just saw this as well. Let me actually Google search. I don't know if is Google the right search for this. Maybe it is. Well, let's see. BTC ETFs total inflows. I want to see couple things, and I've got a ETF screener, and here it is. So inflows and outflows on the ETFs. So I read a couple weeks ago. Let me compare or look and see if I can search for a specific ETF. I'm going to try to find. I think it's BITI or IBIT. Let me look and see if I can find IBIT. Oh, nuts. Where are you? Sign up. No, just give me a. So there's a ton of ETFs in here. Let me see if I can find IBIT. Oh boy. Um, all right. Here, let me finish my thought. The amount of inflows that came into the 11 SEC approved Bitcoin ETFs has made, again, I'm going to fact check this, but from what I read, it made these ETFs like ridiculously busy, ridiculously liquid, ridiculously volume heavy. The amount of inflows that came in has been like staggering. So I wanted to prove that. I want to verify that, but I'm wondering if this ETF tracker has all of those in there. Let me see if I can just alphabetize this. Oh boy. I'll go to 100, see if I can get into the eyes. Let me see. Maybe Investopedia has it. So the BT Bitcoin ETFs and see if I can find the list of 11. Everything you need to know about Bitcoin, where to buy, blockchain. All right, let me see if this has a list. Come on now. Pros, cons, futures. Let me just, I know it's in here somewhere. Let's go. List of SEC approved Bitcoin. There we go. Okay. So this is the list that I'm looking for. And I'm going to try to find at least one of these. So Fidelity is a big one. FBTC. What was the other one? BITB, ARC. Nah, so BlackRock. These to me are the two big ones. IBIT and FBTC. So BlackRock, massive custodian out there with trillions of dollars under management. Fidelity, big one as well. A lot of pensions, a lot of 401ks, a lot of fixed income. But if you're getting 1% exposure in your portfolio because of a Bitcoin ETF, 1% exposure. And if you go back 10 years, this is what's staggering. 1% exposure in Bitcoin has doubled the S&P performance. Again, 1% exposure. So are you comfortable in a portfolio taking 1% risk on something in your entire portfolio and have that fuel your overall gains by double? So instead of annualizing 8% S&P, you're annualizing 16 because that 1% is outpacing, right? So anyway, let's look at IBIT and FBTC. I want to see if those two, and I'll just type this in here. Let's go IBIT, and FBTC. I am still in GBTC. I'm in BITO. I have some mining stocks with MARA, but these are the two that I'm looking at. That's BlackRock and Fidelity. So let's take a look at this flow here. So IBIT, you've got to get out here for alphabetical. Let's go like page 5, page 7, page 9, page 11, FB. Here we go. Maybe in here. Come on, don't fail me now. And if this is like too big of a rabbit hole, just let me know. But I'm curious. I want to fact check the reading of like how much these inflows actually crept in here. So I think I'm on page 11. Let's go page 10. So I'm looking for FB, FB, FB. There we go. FBCG, FBI, FBTC. I'm not. Aha, here it is. Finally, 2.94 billion. Okay. So let me compare that. Okay, 2.94 billion. I'm seeing if this is assets under management. B's are big, right? So FBTC 2.94 billion. Let me see if that pulls it up. And what other data can I glean from this? So FBTC compared to ETFs. Do I have to be a member for that? All right. Anyway, let's check another one. FBTC. Does it pop up here in TradingView for market cap? FBTC. Just has volume in here. Again, you can see since those ETFs were approved, the feed for FBTC and TradingView opened up, crashed off that level, came down here to this 33.80 mark. It's up. I mean, not a bad spot if you're in, that investor that's able to dollar cost average in, maybe you add 1%, add another 1%, have 2% exposure. That's a 27+% appreciation right now. Again, chasing momentum, there's a lot of stocks that aren't performing this well unless you're in, I'm in SNCI that's up 150%. But are you 100% invested? We're talking about 1% exposure to something that's been doubling performance for the last 10 years. That's pretty good. So anyway, I'm just excited. Like, hey, look, we hit alarm. Had an alarm at 49K, and we're hitting some highs. I mean, 50,000's next, and guess what? If these ETFs continue to have inflow and the spot price continues to go up, the next big level that we're talking about in Bitcoin is 68,000, almost 69,000. I'm hoping, and I mentioned this morning in my YouTube session. I am hoping that I'm hoping we have a bull flag, and so we have this run right here. Let me zoom out just a little bit. And Nick and team, if you're still watching, is there any time constraint for me? I do have a webinar at 11 o'clock, so I'll probably wrap up here in the next 5 or 10 minutes, just to be safe. But anyway, let's see. Let's see what we can accomplish here in the next few minutes. So this run to this high, I was looking to see if we had a pullback. We did have a 30% pullback. And so I'm looking to see if we have a pullback, I'd love to see a bull flag, which should be something like this. So this rally, we have a pullback, we come back and retest the high. I would love to see a little sideways action where one more opportunity allows us a chance to get in around 40K. And then the next conversation we're having on this bull flag is we're up to fresh highs at 69,000 and the spot price of Bitcoin continues to run. If we eclipse 69,000 this year, okay, if we get through 69, chasing momentum, that momentum, we're talking about a legitimate run to 100K. I'm not joking. Like, yes, there's more liquidity. Yes, the year-to-date performance on Bitcoin hasn't been great. But if we start to rip like this, I mean, the run on Bitcoin is going to make highlights once again that it had a start of the year where we had, right around 40 some $1,000, had a pullback to the same levels. We're ripping up to the upside. If we go, let's say from current price, and we hit 100K this year on just crazy amounts of momentum, we're looking at an upside of around 100%. I can't think of a lot of stocks right now that I'd look at with confidence and say there's 100% upside in the stock, right? I'm in a couple, some China stocks like Alibaba and Baidu. I think those have good asymmetry to the upside, but it's not happening yet. There's a lot more momentum, coming into Bitcoin. If we break $50,000, we don't pull back, then it's not a bull flag. This thing is just running up here to some highs. Look for past resistance to become support. If you're looking for spots to add, just try to look at buying dips. So two things on Bitcoin really quickly. Either we have a run, we have a bull flag where we have one more chance to add in around 40K, or if this thing starts to run, this pullback is I would add at past resistance becoming support and look to see if we make some fresh highs. And that run to 100% gets pretty exciting. Okay. All right, good stuff. Okay. Any other questions? Let me know. I want to address Sing's question about silver. So I mentioned silver and gold. Gold is trading at 2013. The dollar index is something I'm going to factor in right now. I am bearish on gold in the short term if we break below 2,000 on a daily or weekly chart. So if we get a confirmed break below 2,000 in the near term, I'm looking for gold to head a little bit lower, maybe settle into this range area. We have a midpoint or in this range around 1900. So I could see gold if we have dollar strength, gold settles in around 19. Worst case scenario is this. If we have gold settling at 19, that's area 1. We settle all the way back into these multi-year range lows. That is a big opportunity to buy at 1700. From this point, I would look to return to the highs and all-time highs. If we get the breakout above 21, if the dollar starts to cut rates or the Fed starts to cut rates and the dollar gets weaker, gold is going to benefit from that. Inflation goes up, gold should benefit from that. Inflation goes down, maybe not so much. But as far as positioning on a weaker dollar and more printing and all this other stuff for monetary policy, I still like gold. If we get a nice confirmed move above 2100, I'm long on gold and I'm going to stay long until we hit like 24, 2500. Silver is the same type of situation. It's just way cheaper, right? Silver to me is my area to buy it is if you want to look at $22, pretty good level to buy in for a small loss. So if you have a buy here, small area for risk would be just below this recent low. Upside is the top of this box. We break above 26, very bullish. All the way back to the highs, target 1. Symmetry from this run here gets us up to around $34, $35, target 2. So, again, we don't have to pick this out perfectly, but if we're above $26, very simple, follow the momentum, take on that trade. 26 plus gets to 34. There's good upside there. If I'm going to buy it again, I like the spot of buying here, area 1. We come back down to this area 2. Dollar cost average, I like SLV, all the way back up towards 26. We break above 26, all the way back up to highs, target 1, get to symmetry on the swing, target 2. Best trade I can find as far as silver, gold. I think silver has more technical setups that look favorable. Gold is in a big range, but if you break those levels, measure it, right? Look at your highs, look at your lows on a monthly time frame. And if we break above that, measure that move. That's my projected symmetry on gold. If we have this measure move on silver, it's a swing trade all the way up towards 34.35. Okay, there we go. Caught a monster BTC trade today. There you go. Awesome. Yeah, Bitcoin's ripping like crazy, which is exciting. Okay, I think I will wrap it up there. We'll go. That's a solid little 45-minute segment. I had some fun today. How about all of you? Hopefully enjoyed it. I'm looking forward to doing more of this. Okay. So I'm going to pop out. I got a webinar coming up at 11 o'clock. Traders for market traders will see me in hypertrend webinars, full auto trend system. I'm excited to do. And I've got some testing. I did it all weekend. So I'll be sharing that this week. Come back and join me. Come back and join Nick. Come back and join A1 Trading. Right now, get your hands on the EdgeFINDER Pro. Excellent software. There's a lot more that I need to learn about using it, but it is a great idea generator. It is easy to see what data gives you. And I'll say this, I don't watch the news. I read newsletters and I follow stuff like this where it's like it's data. That is the most important thing to make decisions on. Follow the data, make good decisions, reward to risk, all these, tried and true staples of the industry to make money. And I talked about this last night. I was at a little Super Bowl party and talking to somebody about just, I think full-time traders and very profitable traders, very consistent traders, they make a living making base hits. That's what I do. A lot of base hits, a lot of base hits, a lot of number of occurrences. We sell options. You have 3 or 4 ways to be profitable. You just take high probability trades, manage your risk, but base hits. You can make a lot of money with base hits. You can get in the Hall of Fame with base hits. Okay. All right. Sounds good. Thanks for joining us today, everybody. And we'll see you tomorrow. See you soon. Thanks. Bye.